Welcome back to Jackalyze, where analysis meets instinct. Today, we're examining the participants of the foreign exchange market, the forces that shape the largest and most liquid market on Earth. Most traders assume FX is controlled only by banks and hedge funds. That's a misconception. The reality is a complex ecosystem. Central banks, commercial banks, corporations, investment funds, brokers, and retail traders. Each has a distinct role, each moves the market in its own way. To trade effectively, you need to understand who is driving the moves and why. Central banks and governments. Central banks are the architects of currency. They implement monetary policy, manage economic stability, and intervene when necessary. Adjustments to interest rates or liquidity are calculated steps to influence growth and inflation. Governments may also intervene strategically, shaping market conditions for broader economic goals. Recognizing their patterns is essential for any serious trader. Their moves create the foundation upon which all other market activity unfolds. Commercial banks and financial institutions. Commercial banks execute the majority of FX transactions. They provide liquidity and serve client needs, but they also act as competitors, trading aggressively to profit from volatility. This dual role makes them a primary driver of short-term market dynamics. Observing their activity helps you anticipate market shifts rather than react blindly. Corporations and multinational companies. Corporations operate across borders and require multiple currencies. They hedge to mitigate risk and maintain stability in operations. Large conversions, especially in volatile conditions, can move currencies. By watching corporate flows, you gain insight into structural trends, the moves that shape the market over days, weeks, or months. Investment funds. Hedge funds, pension funds, and mutual funds trade FX to grow capital. Unlike banks, their sole purpose is maximizing returns within a defined risk framework. Their activity can amplify trends or trigger reversals. Understanding how funds operate lets you align your strategy with the broader currents of the market. Retail traders and brokers. Retail traders are small individually, but collectively, they add liquidity and volatility. Brokers provide access, traders speculate. Short-term reactions, news-driven moves, and herd behavior create opportunities and sometimes chaos. While harder to predict, this layer cannot be ignored. Observing patterns here gives context to the larger forces at play. Governments and international organizations. Governments and international organizations use FX for aid, financing, or stability. For instance, in 2015, China devalued the yuan strategically to support exports, causing major ripples across FX markets. This example shows that strategic interventions, even outside traditional trading, can shift markets. Understanding these rare but impactful moves is part of seeing the market holistically. Each participant adds a layer of depth and liquidity, from central banks shaping policy, to corporations hedging risk, to speculators chasing profit. Together, they form the largest and most dynamic financial market on Earth. As a trader, your edge comes from seeing beyond the chart, understanding who drives the moves and why. At Jackalyze, we cut through the noise and show you the structure, patience of a jackal, precision of a trader,